Just because you're paranoid, well, it doesn't mean they're not out to get you. I've been worrying and worrying that the market wasn't taking this epidemic seriously enough. So we get hammered the next time we got some bad coronavirus data. And today we got all that volatility in a nutshell. Average opened down, then pushed to pository before turning violently lower as we started hearing more reports of coronavirus deaths outside of China. And we got a little lift into the close. It was kind of surprising, frankly, we were able to rally at all. Now, if you went off this roller coaster, and I can't blame you, that doesn't mean you should abandon the whole asset class. That's what people are saying in my Twitter file. That's a mistake. Instead, we want to look for stocks that can work even in a crazy market that whips back and forth between euphoria and coronavirus terror. In other words, you want names with what are known as uncorrelated returns. I typically don't use that kind of thing because it's Wall Street mumbo jumbo, but it means things that keep working regardless of what happens with the outbreak. And what fits this bill? I think biotech. It's a strong group that had a rough day because of last night's Democratic debate, where Elizabeth Warren practically ripped Michael Bloomberg's heart out on live TV. And presumed frontrunner Bernie Sanders made it out mostly unscathed. See, Sanders and Warren, the two candidates most hostile to drug companies, well, let me say, they could be a formidable pair. And so it was a good night for them, and that translated immediately into a bad session for this whole sector. But I've been waiting for that to happen. As I've been telling you all along, with these candidates saying what they'll actually be able to do if they end up in office, they're very different things. That's one reason the drug stocks have been performing so well in recent months. And it's why I like them into any weakness like we had. Tonight, I want to focus on one that I don't talk about. It's a biotech that I think has maybe the brightest future. It's the smoking hot Vertex Pharmaceuticals. Now, this is a company that we've followed for a long time, just haven't brought it up. Used to be a promising orphan drug play. Those are those high-priced drugs for incredibly rare conditions with a whole suite of cystic fibrosis medications. Terrible disease. After a big run in early 2017, Vertex fell off the radar for many investors. The stock spent a couple of years trading sideways, bounced between the 150s and the 180s. But last October, the company announced the surprise approval of its fourth cystic fibrosis drug, and the stock ignited. Vertex was trading at 165 in late September, and it's now at 245. And a lot of experts are calling it the most promising story in biotech. I think they may be right. So we got to talk about it tonight because there's a kind of reshuffling in this group, and this is the one that's winning. First off, Vertex has become the leader in the fight against cystic fibrosis. Now, this is a brutal genetic condition that causes your lungs and your digestive system to flood with extra sticky mucus, making it hard to breathe and eventually does wreck your lungs. That's why the average life expectancy for an American suffering from this disease is a tragic 37.5 years. Cystic fibrosis is not a small disease. It afflicts 75,000 people in the U.S., Europe, and Australia, with 1,000 new cases in the U.S. every year. And that's why these orphan drugs are so expensive, because nobody would invest in these life-saving therapies if they weren't allowed to charge an arm and a leg for them, because while that's a lot of people to be sick, well, it's not enough necessarily to be able to make a hugely profitable drug without these orphan drug rules. Fortunately, Vertex has made some major strides in treating this horrible condition. Since 2012, they've come out with 4 cystic fibrosis drugs. The most recent just launched last quarter, and that's driven some spectacular revenue growth. In 2016, Vertex did $1.7 billion in sales. Last year, they did $4 billion. Meanwhile, their earnings have surged from 85 cents a share in 2016 to $5.33 a share last year. Why did the stock explode higher last fall? It's because Vertex's newest drug, Trikafta, which can potentially help 18,000 cystic fibrosis patients in the U.S., got FDA approval 5 months earlier than Wall Street expected. Vertex was ready, though, as the rollout was almost immediate, as CEO Jeffrey Leiden told CNBC's our own Meg Terrell in October.
The simple answer to your question is yes, we are ready. We have built appropriate inventory. We have plans to get this drug out as quickly as we can to all of the patients who are waiting for it here in the U.S.
If anyone had doubts, Vertex put them to rest when it reported its latest quarter a couple of weeks ago. Wall Street expected the company to make $1.20 per share on about $1 billion in revenues. Get this. They gave you $1.70 per share on $1.4 billion in revenues, one of the biggest beats of the year so far. Turns out Leiden wasn't lying. Most of that beat came from Trikafta's sales. They hit $420 million when the analysts were only looking for $95 million. I mean, it's a top-selling drug right out of the gate, and I'm told there's some other good ones, variations of this in the pipe. Now, thanks to this new drug, Vertex can treat up to 90% of the people who suffer from cystic fibrosis. There are 18,000 patients eligible for Trikafta in the United States. That's 6,000 more than their older drugs could help. And that matters. Now, it didn't take long for the analyst community to start realizing that Vertex has something really special here. In the last few months, we've seen not one, not two, but three analysts call this thing some variation of, quote, the best story in biotech. That's why I've been remiss. I should have brought this to your attention earlier. See, in December, it was Credit Suisse, Evan Steigerman, calling Vertex, quote, the best growth story in large-cap biotech. Not only does he like Trikafta, he's also excited about the pipeline beyond cystic fibrosis. They're working on drugs for some blood disorders, like the terrible illness that is sickle cell disease and beta thalassemia, as well as alpha-1 antitrypsin deficiency, which is another genetic condition that can cause serious lung and liver damage, including cirrhosis and emphysema. That said, Credit Suisse also removed their topic designation for Vertex. They thought it'd run too much, and they gave that title to the beaten-down Regeneron. That's Len Schleifer's company. Don't forget, they play a powerful role in some of the terrible epidemics we've had. I sure hope that they come up with something for coronavirus. In December, J.P. Morgan's biotech analyst Corey Kasimov named Vertex one of his top picks for 2020, based on similar logic. He says, quote, this is the cleanest story in biotech, and the next 12 months potentially offers something for everyone, end quote. Wow. Finally, just last week, Citigroup ranked the large-cap biotech names in their coverage universe, and they named Vertex their top pick, thanks to its strong base business, its good growth, long patent life, and the potential catalyst in its pipeline. Vertex currently has $63 billion market capitalization. Listen to what Citi said. Vertex could be the next entry in the $100 billion market cap club, end quote. Now, that would represent a 57% move from where the stock's currently trading. That's why you must keep this in front of you if the stock comes down. So where do I come down on this? Look, as much as I hate to chase, I honestly don't think you're too late to the party with Vertex if you buy at these levels. This is a real company with phenomenal sales, monster earnings, great pipe. In fact, it trades at just 23 times next year's earnings estimates. That's absurdly cheap for a company with such rapid growth. The bottom line, Vertex Pharma got dinged today. And I think this is a very viable dip in what's widely considered to be the hottest biotech story of the year. One that's accomplished something that was unthinkable not too long ago. A near triumph over the scourge that is cystic fibrosis. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.